A blockchain and a community is only as useful as the community that are using it. And so if there's a sort of passive group of individuals, they don't necessarily add value to the network.
I'd like to wish everybody a Merry Christmas and a Happy Holidays and a Happy New Year. And 2023, 2024, and 2025 are the next 3 years ahead. And they most likely going to be the most significant years in this transition and convergence of technologies.
I've just finished what could arguably really be described as the fourth bull market in crypto. And what has happened is each time that bull market has become increasingly amplified, and the companies that get, or the protocols that get attention during it have become increasingly amplified. The money coming in has become increasingly amplified. And this one has wiped out, I think, and this downturn from that fourth bull market has wiped out a lot of the more questionable players. And as this shakeout finishes and we start to see the real potential of the decentralized portion, because don't forget, most of these blowups that we're seeing have been in the centralized players, not in the decentralized players. I like to point out to people that, we had this whole FTX situation, but in that same week, the decentralized exchanges absorbed a 4x increase in volumes with no issues whatsoever, right? As we see this next bull market take place, should start to build again, this, I think, is going to be the really transformational bull market that really starts to change society and behavior.
Yeah, I was just looking through, I build Metcalfe's law models for network adoption, and I was just going through some of the models today, and one of the things that's been very interesting about this bull market versus 2018, I mean, I've been in this space since 2013, but 2018, we saw about 60, 70% of the entire participants leave. So the active addresses went down. If you look at ETH, which is the best proximate for Web3, the active addresses have not gone down at all.
No.
So they're staying. So the adoption builds on itself. So the next phase, which that's what I want to ask you, is what do you think the next phase is? My personal opinion is it's consumerization of Web3. So that's what we've been talking about: music, NFTs, brands, and even where blockchain gets abstracted away and you don't really know, which is Reddit talking about digital, whatever it is. What do you think the next phase is here?
I think that's exactly right. I think you're already starting to see some interesting, I'd say, green shoots, right? This is now a marketplace that is becoming very attuned to supply and demand. And I think that what you will see happen is that this consumerization wave is also going to be occurring almost entirely on public blockchains. And I think a lot of what fed this last bull market were these centralized players, and the public blockchains were beneficiaries of it, but they weren't the drivers of it. And I think this next wave is when all of the apps on these decentralized public blockchains really start to take market share away from the TradFi players and take market share away from the established platform companies, and start to see that money moving into decentralized peer-to-peer models. And that's going to force traditional companies to change their behavior and start to adopt the Web3 paradigms. And that's when I think you're going to get this massive bull wave, because you're really changing the foundational platforms on which society is built and operates.
Yeah, I totally agree.
And we're going to see together for the first time this convergence of IoT, AI, and blockchain all coming together at one time, and they're going to complement each other. And we've not yet seen even a tip of the iceberg of what that is. Regarding our investments and our communities, Flair, they're all machine learning experts. They have master's degrees, doctorates. So knowing that they're in this field to begin with is very encouraging with this convergence. And actually, when I was doing a search for this, there's a number of papers and research. It's a real focus point. So when you see something like that, this is where things are going in the future. And one thing to keep in mind, and this is the hardest thing I think to really grasp, is price is not the best. It's actually a very poor form of adoption level, potential growth, what's being done in the industry, users. And that's where opportunity comes. So for us, the data points that the number of users have slowly kept increasing even through the bear market. The active participation on these blockchains is slowly increasing. Now, yes, there's less TVL in DeFi, no doubt, but that is the core use case for blockchains right now. It's financial systems, financial markets, tokenization. All of that's going to be integrated with DeFi. We are going to have an opportunity to be early pioneers before the enterprise and institutional DeFi. Because yes, RippleX and Ripple have focused on payments, but payments are used in then any type of, from paying back loans to anything, FX markets to derivatives to what you name it, tokenization is going to need payments. So XRP is more than just a bridge currency. And I know that's the whole marketing campaign and this and that.
These need to be as liquid as possible. And so they need to have as many use cases as possible. For XRP, for example, the kind of early beachhead has been cross-border payments, but we see that as just the beginning of something that really has a multitude of use cases to get as liquid as possible. That's what drives utility and value at the end of the day. So I think on all fronts, I see it, but we see that as just the beginning of something that really has a multitude of use cases to get as liquid as possible. That's what drives utility and value at the end of the day.
But I think over the next years, you're going to see many financial transactions where a middleman sits, a middle transaction, an intermediary. Those will get removed, and we'll use blockchain and other digital asset type technologies to remove that friction. And I think all of society will benefit from improving the efficiency of those systems. I think you'll see that. Certainly, you've seen it in securities settlement as an opportunity. The financial transactions around bonds, around derivatives, a lot of these things take a while to settle, and the friction associated actually holds back the industry. Insurance is an industry I think you're going to see touched. Trade finance is an industry that really Ripple, some of our customers have invited us to participate in. And you've seen experimentation around identity in real estate and title management. And these are all examples where I think it's so hard to predict where this will go, in the same way that 25 years ago, when I first got involved in the Internet of Information, I never could have predicted on my smartphone I'd press a button and I'd have a car picking me up minutes later. I think this will permeate lots of different parts of our society.
Ripple plays actually quite an important role. It's a money transmission network, and it does quite a good job of it. And it has deep connections with global governments around the world and has worked really hard on it. So there is a reason the chain is valued as highly as it is, and it's not from speculation, because actually, it got taken off a whole bunch of exchanges because of the lawsuit. It's actually because when I use my netcast law model, the amount of value that gets transacted on the chain is very high. It's being used. Probability is that the value of the chain increases significantly, and as the world moves towards central bank digital currencies, I think the XRP network is going to be somewhere at the center of all of that. So,
and then there's the enterprise grade and the working on to scale out these networks. We're not yet at the point where you could say you can put real values on these in a way that they're networks and token economies, we'll get there. But we're going to see less and less speculation, less and less focus on the exchanges, especially after the FTX. And we're going to see more institutional infrastructure that's going to be built on DLT blockchain. We'll have private blockchains. We'll have side chains. You're going to see more and more of this. And they're not necessarily in competition with each other. I watched one of Tony Thinking Crypto's interviews, who does great interviews with David Schwartz. There's like 3 of them, but one specifically, I'll post the link when I get a chance, that he talks about how we're not in competition. We want the other networks to succeed because it's the competitors who then build out things.
Like if we're trying to constructively build technology that's going to be useful, and if we want to get these things into the trillions of dollars, many trillions of dollars, and just like take over the economic system with better, more modern systems, what we need to do is we need a target market. We need people who are using cryptographic credentials to move money. We need people who are using public blockchain systems and making irreversible payments, because that's our target market. Imagine if you were in charge of Twitter's marketing and nobody had internet access and nobody had phones. Who do you market to, right? Like your target market is people who have internet access. Your target market is people who have phones so that they can tweet like at any moment of any. And Twitter didn't build those things. It's Twitter's competitors in the entire internet ecosystem that put internet access everywhere and put phones that, can use internet access in just about everybody's hands. Like that's what we need. We need to grow that target market. And in that sense, we're not competing with anybody. We're sort of cooperating to build a bigger space. And then if a particular technology is the best solution and people have the ability to use it, they'll use it. But if you try to confine people to use the technology that you like, first of all, that's kind of why I got into Bitcoin, because everybody's like, no, you should use the conventional financial system because it enriches the incumbents. And now it's like, you should use Bitcoin because it makes Bitcoiners rich. And you should use, Ethereum because it makes, and yeah, you'll hear that in the XRP ecosystem too. I'm not, this is not a holier than thou kind of thing. People will tell you build on the XRP ledger because I want my XRP to become more valuable. And I think that's what's going to do it. But what people should do is, number one, if they have the freedom to choose the thing that works best for them, users will get the best experiences. And if users don't get good experiences, there will not be users. And then whatever is the best solution, they'll use it because it's the best. If you have to like capture your users somehow, I think you're not gonna be able to provide the kind of experience people want. So I don't see it as competitive. I really mean that. I know this is sounds like something that someone would say, and I don't know what I have to do to convince people that I'm being honest and serious here. Like, we need to bring cryptocurrency to the masses, to every problem that it can solve. We need to bring cryptocurrency to the masses, to every problem that it can solve. And if there aren't a wide set of problems that it can solve, then that's on us in the space to improve the technology until it can solve a wide set. And then when you go to someone, you say, I have a technology that solves an actual problem you have, why would they not use it?
There was a post, here's just an example. The Bank of England said they were looking for a contract to build a wallet for their CBDC. Everyone on Twitter is like, oh my God, Ripple's going to build it. It was for a test. And that no central bank needs one wallet. It's to build out for the private sector. There'll be many wallets. There's no one wallet. It's never going to be like that. That would be just...
We make this work for a central bank. And the first context we always get asked about is, how do I make a retail payment? How do I do this? So we've already got a measure or a bar that we're trying to set ourselves up against here that we need to beat. So just to enable this, we need to create this ecosystem. So we think about various different ways of breaking down the different challenges, the different experiences of accessing a ledger. Ripple, we've been building a tool called the Issuer Tool that allows a central bank or a regulated authority to issue a currency and have that and be the sole distributor of that. But we also have the roles of these operators. Now, this could be going back to those fintechs, could be third-party developers building solutions on top of. But these are applications that are actually not built by Ripple. These are built by third parties, built by people like yourselves to create interactivity with the ledger. And then we've got the wallet ecosystem as well. So this is not something that Ripple owns in its entirety. This is an ecosystem that we're building to create collaboration and create the ability for people to interact, to drive opportunity through. And then ultimately, we've got the ledger. And because we're running potentially a centralized or private instance of the CBDC ledger, we can play with the ledger itself. We can change it, we can tweak it. And that's something that we've also been looking at as well. And that may be also drive enhancements that we can pass back into the community as we start to look at ways of optimizing certain scenarios.
The central banks would never have one wallet or one service provider. It's the idea is to grow the whole financial markets. And this is where CBDCs will evolve to. I don't even bother paying attention to some of the stuff they talk about now because it's going to be irrelevant in 2-3 years. And they'll be just then having to adapt to what's coming. So this is why, yes, I know I'm talking about something that's ahead in the future. It doesn't have to do it right now. But that's how wealth is generated, is finding those opportunities right before the rest of the masses find them. But it's not just about crypto and digital assets and buying for speculating purposes. It's more than that. And use cases and utility they don't come just because it has utility natively. It has to be built. And you need ecosystem and you need community. And we are that community for Flare that is going to drive those use cases and ecosystem. As more users, there'll be more builders who will come and then build on there and they'll build their applications. And then we'll see this cross-chain interoperability that they're at the forefront of. Ripple's at the liquidity. I mean, we're just like positioned perfectly, but I do want to stress this. Manage expectations. There's no flipping of the switch. I don't repeat that. There's no flipping the switch. Like there could be pumps, there could be this and that. There's no turning switches on. There is a marketing turning switch though. That I believe in. And I don't know what Flare's thing is, but Ripple's we kind of could see coming because they're hiring. There's multiple different clues pointing to it. The enhancements, the different entities building around the ledger. So the idea that we're going to have different side chains and then every side chain can have a layer 2 or like a smaller quorum of a subnet to it. And that's what allows for this true scalability. So what does that mean for the asset pricing? That's where we're not even at that point to be able to value it in that way. So when people say, oh, those high prices and stuff, yeah, I think that they are possible, but they're not going to come from just banks using XRP. I am adamantly trying to get across the point that this is going to be a phased thing and we still have a ways to go. Like you could take profits, but the idea that some's going to be just $100 or $1,000 in value XRP, it's not going to happen just, by just overnight. We're going to go through troughs, but things will mature in this next bull run very differently. And the sign's already there. And I'm already starting to see it seep out because you could see the building, things that again built with the FTX collapse, the Celsius, CeFi, and the exchange. The exchanges are actually holding the market back and the industry. They are legacy infrastructure that is embedded into crypto because of Bitcoin couldn't facilitate trading. And now they've become cornerstones, but they're not going to be forever. They are not. You don't hear about SBI VC talking about their technologies that's built on legacy tech like Coinbase. No, that model is going to continuously fade. Now, automated market makers and DeFi is not going to replace it necessarily. It's going to complement a system where what Liquidity Hub is building.
One of the things that we have is we have software that's right in the transaction processing of, more than 100 banks. And so what do they have difficulty with that's sort of adjacent to what they're currently doing? And we're looking significantly to expand in terms of like what services we can provide them, whether that's like short-term loans off our balance sheet to help them make their payments more easy. Like one of the things that we've been big about is preventing banks from having to pre-place funds where they need them. And so one of the things that can help avoid having to pre-place funds is short-term loans. Another thing we've looked at is like, how can we draw on all of the liquidity in the cryptocurrency space in a way that's useful to banks that might be experimenting with cryptocurrency? So previously, our pitch to banks has been like, we'll make your fiat payments better. And so now we're thinking, well, banks and companies adjacent to banks, like companies deciding to put Bitcoin on their balance sheet, for example, are now starting to do things like with cryptocurrency. So now we might have to go back to those and say, look, you want to accept payments in cryptocurrencies, but you want to hold them in fiat, or you need to make outbound payments. Like, we can adapt that better by drawing on the liquidity, by using our expertise of plugging into sort of like the boundaries between the cryptocurrency and the fiat payment space. Or we have an agreement with an exchange that does the last mile of payments, so let us offer that to you as a service. So that's kind of what we've been thinking of, like, what leverages our strengths as a company that provides our customers on the RippleNet side with like solutions to problems that they actually have.
We're helping customers every step of the way to make sure their wallet has sufficient liquidity at all times for the smoothest possible experience. Over 10 years now, Ripple has been at the crux between enterprises and crypto native services, and we are doubling down on that. I hope it resonates with you in the same way it resonates with me. And this is Crypto Means Business,
where the user experience will be better through just any enterprise, bank, institution that could tap into then that liquidity network of ecosystem of different market makers. Ripple led the first round. I don't know if many people are aware of this. It didn't catch the press, and Ripple didn't promote it. And they never do it, market makers. But they would led the $70 million funding round for Key Rock, which is one of the bigger market makers in crypto. And they work into DeFi and do all that stuff too. Those entities that are the market makers that are doing the arbitrage and stuff, that's exactly who you need to help bootstrap what is going to be under the surface of all the applications built around the XRP ledger.
My earliest vision that I think has held for 10 years now was this idea of sort of public pools of liquidity. That early vision was these pools of liquidity that everybody can contribute to and everybody can draw off, that are kind of unbundled from the payment system or the asset that you're using to pay with. Automated market makers, I think, will help improve that liquidity because they can capture a long tail of assets better than technologies like order books can.
And that's going to take time to build out. We'll see different smart chains built to the side, like hooks and other smart contracts and layer twos. There's absolutely going to be many ways to participate that are very hard to envision right now. Like, we see participation, okay, you got in this DeFi app, you got to do this, clunky that. Yeah, we got to deal with that for now. But the better you get at that, and in the next run-up, the value will flow into the compliant platforms, and even the ones that are semi-compliant will have a larger user base that will feel more comfortable, that didn't maybe use DeFi last bull run, and now they see, oh, I feel more comfortable doing that. So you have to think of all that. If all the users are still here, and it's just that they're not in the assets because we're in downtrend, and we need utility. We need utility, but what is utility? It's not something the asset does always. It's the protocol does it, and the applications that are built around that asset and then that network. So RippleNet and ODL doesn't live in a, isolated thing, like completely off the ledger. It's taking components of just Ripple's inherent protocol, the Ripple protocol, and adding Ripple's Labs' enterprise components to it to facilitate that. But the core underlying order book plus AMM is very powerful. And actually, I have a video I found. It's by A16, and they actually have some great information on their YouTube channel. So the solution that they're building here is beyond what anyone's really talking about in the community. We have this case. It's going to wrap up. We're going to see definitely a speculative run-up probably prior to the case. So prepare for that. So as Flare comes, it's going to launch. Yes, you're really early. But remember, XRP is a 10-year-old network. It's about to get regulatory clarity with institutional adoption, enterprise products ready. So we have to manage expectations of Flare. That's going to take time. Now, now Flare will ride the coattails of Ripple. We're not going to ride the coattails of Ripple, though. Ripple is not the only entity who's going to bring value to XRP. Even in their private CBDCs, they're not building everything. The idea is not one entity built something. And this is a fundamental misunderstanding by just, I think, us coming from traditional markets, is that there's a company behind it and it has to build it and they're going to do everything. They're not. They're going to create an ecosystem. And this is why you should be rooting for Ethereum to do good now. You should be rooting for Solana, rooting for these. We should not be putting these things down because they're only going to help the overall ecosystem. David Schwartz said he would be a watershed moment if any blockchain had a national currency issued on its public blockchain. And he said it would never happen, that Ripple at the time, a year ago of the interview. But now I was watching the Apex video, the Apex 2022, and they do have some that are looking to issue on the public ledger. So how are they able to do that? It's the compliance. But he talked about it as a resilience thing, that they want a kill switch. And it makes sense. So give them the private side chain, which doesn't have XRP. Like the private CBDC ledgers is a private instance of XRP. It could then be connected through a side chain, but it's its own network. It doesn't have XRP. It has the issued asset and they've modified it for that. So there's no private ledger. I just one thing also I want to adamantly stress, ignore the noise. There's a lot of noise in this community and space. It's a very great community and powerful, but we're going to go through a disruption period. It's going to happen. It's going to happen because of Flare. It's going to happen because of what's coming with Ripple X. And then there's going to be this distraction from the price speculation. Now, if you've been holding for a while and you want to take some profits when it's not financial advice, but when you get that price pump from, it could happen leading up to the summary judgment and right after. That's all speculation. Know that. And then we just got to monitor how Ripple is marketing all of this, because this is multiple solutions in one. It's not just RippleNet and ODL. That's one component of many. They're building other products around lending, borrowing, line of credit. And they're building new market infrastructure. Is what we're changing is the way markets are built. Everything from carbon credits to the trading of tokenized assets and the trading of cryptocurrencies, which is not on the blockchain, which doesn't settle on. That's all coming to an end. There's numerous different custodial networks and settlement networks being built out that will be competitive, but also interoperate. I found an interesting blockchain that PolySign is part of and listed in this video. I don't think this is interesting, like super interesting. Because it actually has a token too, but they're part of a consortium that's part of it, and they're listed right there. So I got to dig into that a little more, but I think it's still separate from the Atomic Net, but they're already involved. They're already involved in the ecosystem. It's already there. It's just, you don't see it. There's like a veil over it. And they're going to work with Ripple in ways that aren't on the surface, them coming out saying, yeah, we're going to do this and this together. So people just assume that, hey, yeah, they're doing Bitcoin things now, this and that. They're the key partner to allow the scaling to 7 billion users. The asset XRP, the ledger, and all the applications around it are built for everybody. That's just a fact. There's no debate. There's really no opinion on that. This is a fact. So once again, I really encourage everyone to truly ignore the noise. I'm very disappointed in Link2 focusing on that confidential group, whatever meeting about the guy at the buyback. That is a joke. It's a waste of time. Don't spend your energy. Nothing against them personally, but it's a waste. It's a distraction. It's actually negative for the community. I understand why it's a defensive thing, but once we get a ruling, it's irrelevant. I don't know what they're trying to accomplish there, but I don't like it. It doesn't give me a good vibe. Disappointed in Link2. I told them I was disappointed in them. I go, do you think this is what accredited investors want to see? They want to see some extreme, theory that there is 2023, 2024, 2025. The cycle's probably going to be a little different. Listen to Raoul Powell's recent one on crypto. He talks a lot. There's a lot of good takeaways there.
The bottom of the cycle is always it's a scam, it's a Ponzi, all the media hates it, everybody throws shit at each other online, everybody's looking for blame, looking for scapegoats. We are exactly in that point now. It is ugly out there. And that ugliness out there is a real measure of where we are in the cycle. So we're at the despair and anger phase. And then we have the acceptance phase, which is the boredom phase, which I think we've rolled into, where prices don't do anything for a while and everyone starts getting fed up and moves on elsewhere. You can see artificial intelligence is getting people's attention just when they should be looking at crypto as well. Don't forget, artificial intelligence is not really investable for most of us because it's all VC, while crypto is real-time VC that we can trade, which is part of the magic of it. So we're at the blow-up phase, the FTX scandal. Now, I've seen this. I've seen it with Mt. Gox. I've seen it with Bitfinex. I've seen it every single bloody cycle. And this time around, everyone's like, oh my God, it's the end of the world. Yeah, it's every time the end of the world. And guess what? It's not. It's never the end of the world. People say, well, nobody's ever going to come back into this market. Well, I've been around. I've been around the block a long time. I've been 30 odd years in financial markets, and I've seen this with hedge funds. Long-term capital management, the biggest blow up of a hedge fund in history, the Fed had to bail out the whole system. What everybody shouted at them, they're a Ponzi, they're a scam, they're over-leveraged. Hedge funds are uninvestable. Net outcome, the net assets of hedge funds went up 5x over the next 7 years. Why? Regulation. Regulation appears to have cleaned up the space, and then people feel much safer to come in because the institutions are waiting. And I've had conversations throughout Raoul's Adventures in Crypto, both with hedge funds like Olaf Carlson-Wee, with Jeff Dorman. I've also had it with people like Jurrien Timmer. I've had it with Sandy Call. And everybody tells us the institutions are still looking at this space. So my guess, regulation and an upswing in prices, upswing in global liquidity, and they start coming in a more meaningful way. There tend to be momentum chasers. Also, we saw similar after Madoff. Hedge funds are uninvestable. They're opaque. Nobody knows what they're about. Nobody's going to ever put money in them again. What happened? I think the hedge fund industry went up another 5x in assets under management. So that's what I'm expecting here. Regulation equals safety equals green light equals go. If that coincides with global liquidity, it creates fireworks. And the market has no short positions in. It has no real ability to short unless you want to use Binance. And nobody really wants to use Binance because everyone's a bit scared of who owns it, its opaqueness, even the audits. And so therefore, you've got very few shorts and you've got a massive amount of money coming into the market and stuff. I think we're setting up for a super interesting cycle. So I am been buying any money I can find. I'm throwing into crypto, literally in nothing else right now. I'm super focused. And I have been buying some NFTs. I'll come on to that in a bit. So that's where I think we are in the trend. And that's the cyclical element.
So over the next 3 years, it's important not to stay stuck in just one asset. It's very important. And to stay just in an echo chamber. I know it's difficult to try to follow everything, but the more that you could follow what's going on outside of just Flare and XRP, the better understanding you'll have of Flare and XRP, and then be able to see what else is being developed. And it's okay to be part of more than one community. And then we have micro communities, and these are going to get stronger and stronger. So we're a micro community. Mickey B Fresh Patreon is a micro community, right? So we have a community within a community, and now we're going to get stronger, and we're going to have more things that we're going to be able to do together. So yes, it's a business for me, but that doesn't mean it can't be a micro community for everybody. And it's always going to be an educational resource. Like we're here to help people. That is the fundamental reason why I started the Patreon group and the YouTube channel, was to help spread the knowledge and education of something that takes a lot of time to really dig into and understand. And not everyone has that time. And I was put in a position where I did have that time. And that's the basis of the group to start. But now we're going into a strategy type. Like Flare, we're getting into now. Okay, you understand it. It's always going to be learning. Learning is never done. Even myself, nobody knows everything, because it's impossible to know everything, because you don't know what's coming. There's no plan. There's no group of people that are in the back room making a plan saying this is how the system's going to be. When you have converging technologies like this, there's too many variables that are going to impact that. It's impossible. So what does that mean? You got to learn as you go. So every week that goes by, and keep an open mind that maybe you were wrong on one little thing here. It's okay. We don't have to dig our feet in and stick by something. You want to keep an open mind, because then it allows you to see other things. And I know that with ETHgate and all that stuff that went down, I think community in general, it's natural. Absolutely. It's how Ethereum is the enemy, and they are going to go head to head. There's no question. XRP, especially at the yield and the alpha thing with the liquidity pool, liquidity tokens versus the staked ETH, is going to be probably like institutions are definitely trying to value that in a way, and they'll be different, but XRP needs an ecosystem. We're here to help boost that. We have to, because if we don't, XRP is not going to be as successful. The ecosystem is going to need users. We're those early users. So instead of lab rats, instead of test dummies, we're the ones who get the first opportunity. It's like you get the first taste. And then if that's successful, you reap all the rewards, but you take all the risk, because it might not be. But if you have the knowledge and the information that others don't, then you could see that it's not as much of a risk, or be aware of what the risks are, when others looking from the outside don't have that knowledge and education. They can't really assess the risk and assess the value and the potential of the composability of DeFi and lending markets and enterprise DeFi and institutional DeFi. And this is what SPI is building towards. And then, when people say they won't be, 1,500 cryptocurrencies, 99% will die. I've thought of this more and more. And as I've listened, you have to look at them more like networks. And then there's the native blue chips. So how many blue chip crypto assets are there truly going to be that are layer ones or like governance tokens? That's really how I look at it. Now, there's a bunch of there's always going to be issue tokens. So to say 99% are going to go away it's just wrong. On the surface, it's actually the opposite. Because every network, as these blue chips get bigger and bigger, they're going to have more and more assets issued on them. So that's always going to grow. That doesn't mean that we have another layer one, but we are going to have another wave. So there's the Aptoses, the Suis, Solana's not dead by any means. They're kind of being consumer blockchain. So, regulations will have some impact, but they're not going to have an impact on changing the way the market is right now. Yes, it'll give legal clarity. It'll have different nuances where it will make changes to what's the security, what's commodity, and clear things up. But the industry and the innovation is going to always lead where this goes. Regulations will assist and have a huge impact on opening it up, but it's not going to control blockchains. That doesn't change how that works. The compliance and the services, yes, those things will be added in. Wallets are going to probably be the significant. Delegating access to your wallet is going to be probably where we go in the future. So, for example, if you have a wallet on exchange, it's their account, right? It's on their platform. They have full control of it. Okay, you could access it. But if you have self-custody, well, it's only you. Well, what if you could have yours and then you could give delegated access to it? Like, okay, I want to buy that XRP. I want to swap XRP for BTC through whatever exchange. But you have your own wallet, but then you delegate access to Coinbase, and then they pull that amount from the wallet. Like, that's where we're going with contracts and this donuts thing that Root Network does. So it's a way to have pull payments, either reoccurring or to allow for the wallet not to just to be all under the ownership of the exchanges. And this is where Elizabeth Warren with the craziness, I would just ignore it, because we're fundamentally going in a different direction. And the innovations there are going to be to allow for models that will improve the custodial side. So say they don't want to manage their own keys. There's going to be many solutions coming. So it's not quite there yet, but we're coming. And KYC and PayID or PayString, those domain names, ENS, will all add to it. So just expect those changes to come, because if you're holding the blue chip assets, they all should be able to be in a safe, secure place, the keys and everything, but at the same time be able to be earning for you. These assets are inherently programmable. If they're programmable and there's demand, they better all be earning. That's the key here. This is going to go into the point where you want to get in and have assets that are continuously compounding interest. Now, that interest is very high in the beginning when it's Flare, because it's the same token. But when you can earn other tokens, like, for example, Root Network, you're going to be able to earn XRP by staking it. That's pretty damn cool. That's really cool. Where can you earn XRP? Just like with Flare, you are an agent and you stake basically collateral of FLR, you earn XRP. That's pretty powerful. So those are the types of things where we got to look for the best options on how to use our FLR.
Those that essentially use the Flare token become a larger part of the community. And those that don't use the Flare token and are essentially passive in the network become a smaller part of the community. From my perspective, that's a very desirable thing to have, because a community is only a blockchain, and a community is only as useful as the community that are using it. And so if there's a sort of passive group of individuals, they don't necessarily add value to the network. So we have this minimum thing that people need to do in order to be able to be part of the future of Flare, and that is to wrap their tokens for 36 months. It also allows new entrants to the network. That's incredibly important to me, such that if you obtain Flare through any mechanism, you essentially also get the same rights as anyone else to wrap that token and to be a larger part of Flare in the future.
We need to bring cryptocurrency to the masses, to every problem that it can solve. And if there aren't a wide set of problems that it can solve, then that's on us in the space to improve the technology until it can solve a wide set. And then when you go to someone, you say, I have a technology that solves an actual problem you have, why would they not use it?
So when you look at what's the vision? Okay, you say it's the internet of value, but what does that mean? Who's going to use this, right? You can't expect institutions, enterprise to use this if you don't have an ecosystem. That's what the chicken and egg on top of liquidity was. And community, is going to ride the coattails. They're here just to, be fans, and just get in early, like we're a test dummy lab rats. but we're not. It's actually, you know what? It's our opportunity as pioneers of the network to see what's being built. 20, this is it. This is the next bull market's going to be the bull market. And I'm not saying that it's hype. It is an absolute factual information underlying showing that this is going to be very different. There's no alt season and any of that crap coming anymore. Those days are over. So the cycles too, they'll continue, but those hot dog coin and this coin pumping, they're not going to, that's so. We're going to see something different. I don't know what Bitcoin does, if it holds, if it doesn't, and as the top. We'll see. But this is the time period. And we just need to keep observing. And the more you observe and then learn as you go, because there's certain things you actually can't learn right now because you don't know, because they don't exist yet. And then in 4 months they do, then you got to learn it. So that's the kind of mindset you just have to understand. There's no way to know everything because it's a consistent learning process. It's not like learning history or traditional markets where there's already a track record of proven ground. We're at the frontier of the new financial system, and you are leading the way.
Painful though these bear markets are, if you look from low to low, they're always rising. Just look at the Bitcoin chart. Even when you take the low, and I took it from like 2011 low all the way to now, it's still rises on average at 140% a year.
I'll take that.
Even with the 70%, 80% swings within it. Yes. And people can't get their heads around it because people still think that this is a cyclical phenomena. It's cyclical in a secular uptrend, an exponential secular uptrend.
Yes. And look, even with the big run up and collapse that we've seen, even having we did some studies, and even having a 1% allocation to crypto assets in a diversified portfolio enhanced the returns significantly and raised the risk only modestly, even with the big run up and collapse. So I think that, this will become, I like to call digital assets right now a frontier risk asset, a frontier risk alternative asset. And I think that frontier will move in very quickly, just like we saw with private credit and the emergence of peer-to-peer lending. That started as a very niche kind of dangerous marketplace. And now we're at over $1 trillion assets under management in private credit.
Where are we in the long-term adoption trend? Well, the adoption trend, if you see this chart of Bitcoin, that's the log trend of Bitcoin. We're 2 standard deviations oversold. We're the most oversold we've ever been versus trend. And we're at the point of global liquidity turning. And we've got, if you believe in it, the halving. It's all coming into place exactly at the same time. Again, really interesting. And here's the long-term log chart of ETH. Same story, right on that big support level. And these kind of things are really interesting. The last time we got the cyclical cycle down onto the logarithmic trend, or to the bottom end of the logarithmic trend, was 2018, December. November, December 2018, we saw that puke, the final puke lower, which I think we saw in Bitcoin in October from the FTX, and I think we saw in ETH in June. What happened was that's when volatility came to the low and the market started picking up. That period, as soon as the Fed pivoted, was a complete change in markets. 2018 had seen the kind of falls we've seen now, about 20, 30% falls. It was sharp. It was nasty. Everyone was terrified. And then what happened was the Fed went, okay, sorry. Yeah, we can see the economic data is falling apart. Inflation's coming lower. So we're going to stop. And I think the S&P did about 15%. I think oil did about something similar. And then the NASDAQ did about 20. Exponential age stocks, the growth technology stocks, did about 24%. Bitcoin in 9 months did 300 or 400%, as did ETH. So these were staggering gains that came out of that environment. I've always referred to it like a beach ball being held underwater because the adoption trend is still there. What's fascinating about the adoption trend this time around, particularly in ETH, is the volumes have remained reasonably high. The number of active users has remained high. The total value transacted, which is the other part of the Metcalfe's law equation, has actually come down as the price of NFTs has come down. But the other measures look like it's robust. 2018, we saw a much larger fall in daily active users because it was earlier in the network adoption phase. But this time around, we get to build on top of what we built on from the last cycle. So that makes me very constructive overall. So here we are on the long-term adoption cycle where Metcalfe's law kicks in, and this is the thing that drives the exponential gains. Every time we get to this situation, we get new highs within about 18 months, maximum 2 years. In fact, within 3 years, even if you bought the 69,000 high, in 3 years, you'll see it go through. That's how it's always worked. Would it work this time that way? I don't know, but probability is there because of this network adoption trend that we're seeing. So I'm expecting 2023 to be a decently good year and 2024 to be extremely good year. If you remember, I said inflation, I think, goes negative. So therefore, we will see much more stimulus and growth will remain somewhat sluggish. So I'm again excited about where we're going to go. And we will go from 300 million users, and next time around we'll be at 1 billion users. And that trend rate of adoption just continues higher. So it's all to play for. And it feels always the darkest before dawn. And Christ, does it feel ugly right now. I mean, everybody hates everybody, and everybody's accusing everybody of being a scam. It's Polini Montrachet, in case you're asking, which is my favorite white wine from Burgundy.
Again, the use cases enabled once you can start to connect all those different chains. What does that unlock, Hugo?
So broadly, it unlocks the ability for developers to build applications across multiple chains. This means they don't have to be restricted to, say, a single ecosystem. That's one of the first components. The second is it allows the value to flow between different chains. So you want to use Ethereum on, for instance, Aptos or Sui, to name some existing chains, in order to stake that Ethereum to potentially an automated market maker there. So if you think about blockchains like maybe different countries in an economy, really what Flare is trying to be is I suppose you might think of it as the SWIFT for those, for essentially a new economy. We think of Flare really as like sort of the Cosmos hub for everything that isn't Cosmos.